Welcome to an in-depth analysis of portfolio optimization in what experts are calling the age of volatility. Today, we'll explore a comprehensive 27-page research report that examines how investors can navigate an increasingly complex and turbulent financial landscape. The global investment environment is undergoing a fundamental transformation, driven by four powerful structural forces that are reshaping markets worldwide. First, we're witnessing the terminal phase of a multi-decade long-term debt cycle that has defined monetary policy for generations. Second, artificial intelligence is creating both unprecedented opportunities and disruptive challenges across every sector of the economy. Third, climate change is escalating, bringing both physical and economic consequences that traditional models struggle to predict. And fourth, we're experiencing a fundamental fracturing of the geopolitical order that has underpinned global trade and finance since World War II. These forces combine to create what the report calls systemic fragility, characterized by market whiplash and a heightened probability of economic and political shocks. This comprehensive study analyzes a carefully curated selection of assets designed to thrive in this volatile environment. The portfolio includes traditional and digital stores of value, specifically SPDR Gold Shares and Bitcoin, which serve as hedges against different types of systemic risk. The analysis also examines cutting-edge thematic technology ETFs, including the Defiance Quantum ETF, Amplify Transformational Data Sharing ETF focusing on blockchain technology, Global X AI and Technology ETF, ARKQ Technology and Robotics ETF, and Roundhill Generative AI and Technology ETF. Finally, the study includes a targeted play on energy security through the VanEck Uranium and Nuclear Energy ETF, recognizing the critical role of nuclear power in both energy independence and decarbonization efforts. Using rigorous quantitative modeling, the research constructs four distinct portfolios, each optimized for specific objectives. These include maximizing the Sharpe Ratio for risk-adjusted returns, maximizing the Sortino Ratio to focus on downside protection, maximizing total return for aggressive growth, and minimizing volatility for capital preservation. The analysis period begins from May 18, 2023, when the newest ETF in the universe launched, ensuring all assets have comparable historical data. Both annual and quarterly rebalancing strategies are tested to understand the impact of rebalancing frequency on performance. The research reveals four fundamental insights that every investor should understand. First, there is no single best portfolio for the age of volatility. The optimal allocation depends entirely on an investor's specific convictions about which macro force will dominate: monetary debasement, technological disruption, or geopolitical conflict. Second, the Bitcoin-gold duality emerges as the primary driver of portfolio performance. Gold serves as the anchor for stability and a hedge against traditional inflation and geopolitical risk, while Bitcoin offers an aggressive, albeit volatile, hedge against systemic fiat currency failure and provides high beta exposure to technological adoption. Third, the technology-focused ETFs show significant overlap in their holdings, particularly in megacap technology stocks. This creates concentrated exposure to specific market segments, with diversification benefits coming more from different management philosophies than from truly distinct thematic exposures. Fourth, rebalancing strategy matters significantly. Less frequent rebalancing tends to favor momentum-driven assets like Bitcoin, allowing for greater total returns in bull markets. More frequent rebalancing can enhance risk-adjusted returns by systematically harvesting volatility. The quantitative results demonstrate clear trade-offs between different optimization objectives. The maximum return portfolio heavily weights Bitcoin and growth-oriented technology ETFs, delivering the highest absolute returns but with substantial volatility. The minimum volatility portfolio emphasizes gold and more stable technology exposures, providing smoother returns but potentially missing significant upside during bull markets. The Sharpe Ratio optimized portfolio strikes a balance, seeking the best risk-adjusted returns by carefully weighting both defensive and growth assets. The Sortino Ratio optimized portfolio focuses specifically on minimizing downside risk while allowing for upside participation. This analysis provides a comprehensive toolkit for sophisticated investors navigating uncertain times. Rather than prescribing a single solution, it offers a framework for aligning portfolio construction with individual macroeconomic outlooks and risk tolerances. The research emphasizes that successful investing in the age of volatility requires understanding the interplay between traditional safe havens like gold and emerging digital assets like Bitcoin. It also highlights the importance of thematic technology exposure while being aware of concentration risks. The age of volatility demands new thinking about portfolio construction. This comprehensive analysis doesn't provide a single answer, but rather a strategic guide for building resilient portfolios capable of weathering and potentially thriving in the turbulent decade ahead. The key is not to find the perfect portfolio, but to understand the trade-offs and align your investment strategy with your convictions about which forces will shape our economic future. Thank you for joining this deep dive into portfolio optimization for volatile times. The full 27-page report provides detailed quantitative analysis, performance metrics, and additional insights for those seeking to implement these strategies.